Yo, what's going on, everyone? Quick little trade breakdown on Usdjpy before I go to bed. So let's get straight into this. So I shouldn't get that. So basically, I am sells on Usdjpy, even though the overall trend is still pretty bullish. But shortly, I will explain why I am sells on it. So if we look at the daily time frame, first things is let's identify the trend by higher highs and higher lows. So obviously, we're on the macro time frame right now, the daily, and we're looking at lower lows, lower highs. So we have this high, we have a higher low, and we have a higher high. Clean, high, higher low, higher high. Now price action ends up reaching this point, and it ends up breaking structure. It broke below the previous higher low. So that basically tells us that the market is overall looking to be short now. And like I said, if the market breaks structure, and it's showing you signs where previous highs and lows are getting broken and now lower lows and lower highs are getting in the market, that's your first identification of a reversal. So from here, like I said, we would be focusing on the start of this move, and we'd be looking for institutional candles inside of this impulsive leg that broke structure. So let's take our Fibonacci and let's measure the high to the low. Now in this case, we have our blue zone, which is the 70, 78 and the 88. And these are our discounted levels for taking sells. Any institutional candle that are inside these blue zones, they are considered to be premium, right? So they're premium, meaning it's cheaper for us to sell over here, or better for us to sell. So at this point, I go down to my 8 hour, and I'm looking for institutional candles the market can potentially react off of. In this case, we have a really clean candle right over here. The market ends up reacting off of this last institutional up candle before the major move down that broke structure, and then price taps into it perfectly, right? We tap into it once, the market goes down, and then it taps into it once again. Now notice this. Now we'll get into that. So right now we can say price is inside of our higher time frame POI. This is a higher time frame POI. The way I marked that is just because this is my order block, and yeah. So price comes in, gives us a reaction, goes back up. Now look at this. When it did give us that reaction, we created a high, higher low, and then a higher high. And then price goes down and breaks the previous higher low once again. What does that tell you? Well, that tells you that this little bullish structure that we were seeing, it's potentially getting broken now. Because look, now we broke structure. So we broke structure once again. And what did I say? What happens when you break structure? Now you want to focus on that institutional, the leg that broke structure. In this case, this is that leg, that expansion down. And focus on the institutional candle that's the cause of it, that started it. So let's look for an institutional candle. Right now we don't see nothing. 8 hour, nothing. 7 hour, nothing. 6 hour, boom. Now 6 hours wise, we have a really clean last institutional up candle before the move down, and it broke structure. Not only that, but it also cleared liquidity, because we can see that there was a ton of equal lows right over here that the market did end up taking out. So we ended up clearing liquidity, and we ended up breaking structure. Because look at this, the high, higher low, higher high, and then the market breaks structure. And last time it did that, look at what the market did. It came into this institutional candle, and then it sold off. So now what we're doing is we're focusing our point of interest inside of this institutional candle, this 6 hour institutional candle. And all we're doing is we're entering at the open with a stop loss at the high. Now if you want to look for more confirmation, you can wait for price to come back into this level, show you a Wyckoff distribution schematic, or you could keep it simple like me, and I'll show you what I mean by that. So let's do this, and this is the schematic we'd be waiting for. So price is obviously gonna have to make its way up, right? And it's gonna look like something like this. Price is gonna come into our point of interest, something like that. Boom, it's inside of our point of interest. Now, what are we expecting? We see this bullish move up, right? What we need to see is this bullish higher high, higher low get broken. Once we see price breaks past a previous higher low, for example, right here, we have this little higher high, higher low. Once we break past that higher low, that means that the lower time frames are now overall bearish as well. If the higher time frames are bearish and the lower time frames are bearish, that's the best time to get into the market for a sell or a buy, depending on this scenario. Now, once we do see that break of structure, we're focusing on institutional candles inside of this leg. So if we see an institutional candle over here, we set a limit. If we see an institutional candle over here, we set a limit. and price either taps this one or this one, and then we get in or out. Or what you could do is, and by the way, by doing that, you're minimizing your risk and maximizing your reward compared to if you just enter right away. Now, if you are kind of lazy like me and you don't want to wait for confirmation, you could just enter right away with a limit, but your stop loss will be a little bit higher than you expect it to be, and you won't have the most confirmation in this trade, so you won't be as comfortable. But overall, this still does work. So you could set your entry rate over here and then take profit the next level of liquidity. Now if we look at the line chart, we can easily see this is a level of support that the retailers are buying at. We need to target those stop losses, right? So we could target that level where liquidity is right over here, or just target the next impulsive low or the next swing low, which would be right over here, right? In this case, we're just going for a nice target of right over here for a 10 to 1, and I don't care if this one doesn't play out, right? Because who cares? At the end of the day, there's more setups that we can focus on. But either way, this is a decent setup. The confirmations we have is the market did end up, let's actually look at this. Let's go to the 30-minute. Look at this. We ended up clearing Asia, London, and New York liquidity in London. So we have time and price. You know, that's one confirmation. 2, we have break of structure on the daily. 3, we have institutional candle. 4, we have momentum inside London session. 5, we have imbalance. I didn't even talk about that, but we have imbalance right over here. Right. So that's 5. 6, we have another break of structure on the intraday time frames, like the 30-minute. 7, we have liquidity. We're targeting the next level of liquidity. So we basically have 7 confirmations for this trade. And if I wanted to refine this, I could easily refine this, but the zone itself isn't too big. It's only about like 18 pips, so it's not worth refining, because then I could potentially miss the trade and it's not worth it, right? So we have about 7 confirmations for this trade. 8 if you're including the Fibonacci. If we take our fib high to the low, if all these institutional candles are inside of our blue zone. So we have about 8 to 7 confirmations for this specific trade, which makes a lot of sense. So yeah, that's generally what I'm looking for at Usdjpy. I'll definitely do an update letting you guys know how this trade ends up playing out. But anyways, thank you for watching, and yeah, have a good one.